Lots of people say that the property market is in a massive bubble and we're on the precipice of a massive market crash. Now, I agree and I disagree with these claims because once again, it depends on where you're investing. Let me explain. We can see that the US property market isn't anywhere near as overvalued as Canada's housing market. Home prices in Canada have greatly outpaced the growth of disposable income, but that's not the case in America. Property prices could crash in Canada, but continue to grow in the United States. Property prices continue to rise in the United States for a number of reasons. One of those reasons being that the undersupply of housing in the United States is massive. In these charts here, I show that the home builders in the United States are simply not keeping up with the demand of new home buyers. Another reason is the enormous flow of migration to the United States. We can see that America has the highest amount of immigrants out of any country in the world. In fact, it has 3 times more immigrants than any other country. So America is building half as many homes as it was a decade ago, and there's a continued growth in the population in the United States. This is a perfect recipe for home prices in the country, less supply and more demand, so prices will continue to stay high. Another reason that property prices in the U.S. could remain elevated is the massive change in interest rates we've seen. The U.S. Fed has raised rates faster than any other time in history, and this has made a big impact on mortgage rates. Mortgage rates have skyrocketed to their highest level in a decade, and many people in the U.S. are locked into 30-year mortgages at below 4% interest, and now they don't want to move houses. Well, they do, but they can't afford to. This means someone looking to upgrade or simply swap houses into another part of town would be forced to pay a much higher interest rate for a new mortgage. And honestly, why would you? So what I'm seeing in my area is a house that cost $460,000 a year and a half ago had a payment attached to it of $1,500. I looked at that house over the weekend, same house, same price, new mortgage payment of $2,850. That's almost unbearable for most households to add another $1,300 just for a mortgage to move down the street or across town. And this is why we're seeing the lowest level of inventory in decades. There's simply no one selling their home in the United States. And I don't mean no one, but there's very few compared to what's necessary to meet the demand and the need in the marketplace that we see as normal. I mean, there's always somebody selling and there's always somebody buying, but that average that needs to happen so that we have an equilibrium in the market just isn't there because inventory simply doesn't exist. The U.S. real estate market is also far more insulated from higher interest rates than the Canadian real estate market is. Over 50% of Canadian real estate mortgages are made using a variable rate loan. This concerning trend is that Canadian variable rate loans have reached their highest level in 20 years. This is why potential mortgage borrowers are fleeing from variable rate mortgages. The orange line in the chart below highlights a 13-month exodus from variable rate mortgages. This has now led to a 70% rise in interest costs for Canadian borrowers just this year. The average mortgage has increased by $820 a month in Canada. The situation is a little bit better in America. Only around 10% of mortgages in the United States are on a variable interest rate term. This is a significant decrease from the 30% levels we saw just before the 2008 housing crisis. And as we know, that housing crisis created the negatively amortized loan that now put you in a house that you owed more on it than it was worth at an interest rate that was higher than what you started with, making the payment unbearable. So those are a couple reasons that could explain why the U.S. housing market might not collapse like many people are predicting. The biggest thing I want you to take away from this video is that there is no one property market in the United States. There are different property markets with different fundamentals and valuations from all around the world. Property prices could be crashing on the East Coast of America while prices continue to be increasing on the coasts of Texas or Florida. But if you want to learn more about the 5 best states you should be investing in for 2024 in America, make sure you watch our recent video on that topic. I will put the link for that on the screen right here. Let me know in the comments down below what you think the market will do next. And if you like this video, make sure you subscribe for more, and I'll see you in the next one.